This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today, searches stay elevated even on Sunday as investors process February's historic finish. Markets closed Friday with the S&P 500 at 7,040, holding comfortably above the 7,000 milestone broken Wednesday after Nvidia's earnings. The Nasdaq finished near 24,200, and the Dow closed around 49,800. February delivered a 200-point SP rally in just 5 days after Nvidia's 78% revenue growth validated AI infrastructure spending. Now the question is whether March can build on that momentum. February's rally was driven by one catalyst: Nvidia proving AI demand is real and expanding. The chipmaker's 78% revenue growth, insatiable Blackwell platform orders, and CEO Jensen Huang's multi-year visibility demolished weeks of skepticism about tech spending. Software stocks that fell 30% during the AI panic recovered 15 to 20 in days. The S&P 500 breaking 7,000 for the first time validated months of concentration risk as the right bet. Friday's modest pullback was healthy profit-taking and month-end rebalancing, not reversal. The key technical signal: the market held above 7,000 into the weekend, confirming the breakout wasn't false. March brings tests the rally must pass. Monday's ISM Manufacturing Index will show if the real economy matches tech strength or if we're seeing divergence. Jobs report Friday determines whether labor market cooling creates room for Fed rate cuts without breaking the economy. Inflation data mid-month matters. If prices re-accelerate, rate cut hopes fade. Geopolitical risks persist with tariff uncertainty after the Supreme Court ruling and Trump's vow to impose new levies. But the fundamental backdrop improved. Corporate earnings validated AI spending. Economic growth is moderating without collapsing, and inflation is trending down slowly. If data cooperates, March could extend February's gains. Your portfolio ended February at all-time highs if you held through volatility. Tech accounts with semiconductor and software exposure gained most from Nvidia's validation. Even conservative index funds hit records above 7,000. For March, watch the 7,000 level closely. Holding above it keeps the bull case intact. Breaking below signals the rally overextended. If jobs data shows cooling without collapse and manufacturing stabilizes, that supports continued gains and eventual rate cuts, helping mortgage costs and borrowing rates. If data weakens sharply, recession fears return. Nvidia proved AI infrastructure is real, but March will test if the broader economy can support premium valuations. Markets reopen Monday with ISM manufacturing data at 10 a.m. Eastern. Watch if factory activity is expanding or contracting. Weak numbers could pressure stocks despite tech strength. Also monitor any tariff announcements over the weekend, as Trump's trade policy remains unpredictable. Midweek brings service sector data and potential Fed commentary. Friday's jobs report is critical. Expect 180,000 jobs added with unemployment steady around 4.3. Strong jobs support the economy but delay rate cuts. Weak jobs accelerate cut expectations but raise recession concerns. The S&P 500 must hold 7,000 to validate February's breakout. March determines if this rally has legs or needs rest. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.